Today's video is going to be all about USDA guaranteed loans here in the state of Florida. Also, the Florida Hometown Heroes program. I'm going to interview a local lender lady named Kat Barker with First Coast Mortgage Funding. She's very well versed in both of these programs, and we're also going to cover the pros, the cons, and fill in all the gaps. And you're going to want to stick around to the end because we're getting after it right now. Okay, so I'm going to introduce you to Kat Barker with First Coast Mortgage Funding. She's my go-to local lender lady here in the Northeast Florida area. And we're going to talk about USDA loans, why we think that they're a great go-to loan option for folks to get a house right now. You know, they're 0% down, like 80% of the United States is in a USDA eligible zone. So I'm going to let Kat take it away. I'm going to ask her a few questions.
Awesome. Hey, Jay, thanks for having me here, by the way.
Hey, thank you for taking time for this because nobody knows this stuff better than you do. Okay, so with a USDA loan, what would you say are the pros?
So definitely the main pros that are going to attract home buyers today is the fact that it is a 0% down program. This is a 100% guaranteed back loan by the government. And when we say USDA, think of like the U.S. Department of Agriculture, the people that check our meat, for instance. Okay, so this is a loan that is primarily designed for rural areas. I can't really say that word. Which 80% of America is actually USDA considered. So that's a fun fact. But along with just having 0% down, a couple of other perks about this loan. I'm sure, you know, if some of your subscribers have heard, you know, mortgage insurance, private mortgage insurance. So these are, you know, this is insurance that you pay in your monthly payment to the mortgage company. It does nothing to you, nothing for you, rather. It's just a insurance just in case you fail to make your payment to the loan company, essentially. So the difference between a USDA loan versus our, you know, or FHA or conventional is that the mortgage insurance on it monthly is significantly cheaper too. So that helps, you know, with monthly payments as well.
So would it even be less than maybe an FHA loan?
Yeah, perhaps.
And definitely lower than conventional, right?
Oh, yeah.
I gotcha. So is this limited just to first-time home buyers on a USDA loan?
You know, that's a common misconception. When I speak to home buyers that have heard of the USDA loan, they do tend to, you know, associate that with being a first-time home buyer. But no, you are able to be a repeat home buyer as long as you qualify for the loan. Now, there are certain qualifications that we'll get into in a second, but no, you do not need to be a first-time home buyer. In fact, you can purchase your home with a USDA loan if you already own a property. The trick is it can only be one home, and it must not be in a commutable distance between the new home that you're buying and the home that you already own. So you can only own one property, but.
Right, but if you're relocating or you have a need to change homes or something like that, it's not, you can't do it as like an investment. It has to be your primary residence, though, right?
Correct. It has to be a primary residence. It can only be one unit. You know, you can't do a multi-unit with this one, like an FHA loan. But yeah, for instance, say you were relocating, you had your home up in Tennessee, and you wanted to come, you know, live in, you know, let's say Palaca, Florida, and you know, you can keep that home up there and buy a home down here with that USDA loan because it's, you know, not commutable essentially.
Right. Okay, they would have to make that other property maybe an investment property or something like that.
Turn into investment, second home, you know, whichever, or unsell it later, you know, if they needed to. And
okay, I'm just going to put this out there. If a person has a lot of liquid money and they could already qualify for a conventional loan, this probably isn't going to be the product for them, right? A USDA loan. It's more for somebody that can't very well do like a conventional loan or something like that, right?
Yeah, this loan is really suitable for those borrowers who have lower debt monthly, little to no debt, and decent income. The only trickery to it is every county basically has their different income limits.
So, okay, so speaking of that, let's knock out some of those. What would you say some of the cons are? You just said that income limits, right? Does that pertain to just one person in the household or everybody in the household or what?
So to qualify for a USDA loan, they are going to want to basically confirm anybody that is over the age of 18. And if they are working in that household, we're going to need to include their income. And so, we're taking a look at everybody that's over 18. And the downside of this loan is that USDA does set some pretty low income limits. So I think in our county, it's a 650,000.
Yeah, yeah.
Which is pretty across the board for Florida.
We checked that out before we started this.
What's that?
I said we checked this out before we started.
Yeah, we had to confirm that one because I thought it was higher, and I wish it was higher, because if it was, we would have a lot more people being able to qualify for this or interested in it. But yeah, that is one downside to it.
And then if a person has a larger family, so it's 110,650 for 1 to 4 family members. And then if it's over 5 family members, it's $146,050.
Yep, you got that right.
Okay, cool. Is anywhere in Florida okay for this or what?
Whenever I have somebody that's interested in doing a USDA loan, I know I've done quite a few of these, so I know whereabouts in our area, what pockets are USDA qualifying, but no, not just everywhere. Your major metropolitan cities like Jacksonville, Palm Coast, St. Augustine, those, in cities are typically not USDA eligible, but they're the spaces in between are. A lot of Central Florida is USDA eligible. We actually have a map that we're able to use that's on the USDA website, where you can go on there, click single family guaranteed, and check out the property eligibility. You can also run a simulator to see, based off of your income, would you qualify for this loan? So yeah, that's a great way to check, and that's how I look. But a lot of the land is.
I will be putting a link to that USDA eligible website, so you can type in the property. There's a box for the property you can type in, or you can also look at the map itself. I'll give you a quick lesson on USDA eligibility map, how to use it, where to go, and we're going to do it right now. So looking on the screen, you've typed in the address and this pulls up. And it says, welcome to USDA income, property eligibility site. And you're going to click single family housing guaranteed. And then it loads this map. So there's a couple of things you can do. One thing that you can do is go over to the left-hand side and zoom up and keep zooming on Florida. And there you see Jacksonville, of course. And you can see all of these areas that are not orange. So all of the areas that are not orange are going to be USDA eligible. And then there's another thing you can do to identify a specific address, whether it's USDA eligible or not. I actually am going to grab the address from Publix. And we're going to see if that area is in a USDA eligible area. And there's the answer. This address is located in a USDA eligible area. And you can zoom back out and you can see that we are close to a World Golf Village area, which is a very desirable area, and we're here off US 1. So that's how to use the map. There are some pockets of USDA eligible properties that are surprisingly close to some larger towns. right?
Yeah, yeah.
Okay, very cool. What about multifamily? You were saying, so you can't do multifamily or any of that with this. But what if it had like an in-law apartment or what they call a granny flat or something like that? Would that be okay?
Unfortunately, no. They're really strict on the single family part of it.
Okay.
Just simply because it is 100% guaranteed government backed loan. They don't want investors taking advantage of this,
Okay.
this program.
Okay, I gotcha. Can you have any co-signers on there? From what I understand, you can't have anybody that's not an occupant as a co-signer, right?
Yes, that is correct. So no non-occupying co-borrowers are allowed on this loan, but you can have up to 4 people on the USDA loan as co-borrowers, as long as they're all going to be in the house.
Can people, if they get a letter like from their parents or grandparents or something like that, are gift funds allowed?
Gift funds are allowed, yes, if need be, for like your closing costs.
Or yeah, in other words, that's not excluded, right?
No.
Okay,
Nope, it's
very cool.
certainly an option.
And then, so I would think these USDA loans, from what I understand, are also better for, I won't say move-in ready, but a property that's been fairly well maintained, right? Because like a fixer-upper, something really rough with like broken glass or exposed wiring or that kind of thing, that's probably not going to be a good idea, right?
Correct. Yeah. No, the standards for USDA home is going to be kind of up there with FHA. They're a VA loan, simply because the government, the banks are not going to loan on money for a home that is going to perhaps cost the borrower money in the long run, or shortly down the road, where now they're at risk of not making their mortgage payment. Now they're having to fix a dilapidated house. So with these 100% guaranteed back loans, they do require almost a turnkey ready home, just safe, livable conditions.
Okay, so not necessarily new construction, although I know there is some new construction, but nearly new or well maintained. That's what we're thinking of, right?
Correct. And I'm gonna top onto that too, because I notice, and obviously in a lot of rural areas, we tend to see more manufactured or mobile homes. So another con to add onto the USDA loan is, well, I actually kind of look at it as a pro, but a con to it is the fact that if you're going to be purchasing a manufactured home, it has to be built within 12 months. So,
okay.
Yeah, it can't be older than a 12-month new construction. But if you're going to buy a stick-built home, then that could be as old as however.
So, do these loans take a little bit longer to close than a conventional loan or an FHA loan necessarily, or?
So I'm a broker, so we move a little faster on our side, but USDA loans can take a little bit longer. And I've never had one go over a regular 30-day contract, but again, that's because we work quickly. But we have to go back and forth with USDA. So after the loan is, clear to close on our end, the lender side, we then pass that file off to USDA, where they have to do their little underwriting and at the very end. So their turnaround times could be a couple of days, which then could perhaps push the closing date out. But we, as a loan officer, we always communicate that with our realtor partners and our borrowers on that timeline. And I usually ask my people, give us about 5 extra days, instead of a 30-day contract, let's do it 35 days. And if I can get it closed sooner, we will.
Right. So folks, a realtor that you work with, hopefully that's me, will write that into the contract so that we're more than covered. And the way that the contracts are written is, by a certain date or before. So it's by that date or sooner that we could close. So believe me, we're covered on that. We got the contract wired. Okay, got ya. So let's do a little trade-off. Let's try to do a trade-off on some towns that we know that are probably USDA eligible. Okay.
Let's do it.
So I'll get started. Like where I live is in St. Johns County, and there's a little part of St. Johns, which is in St. Johns County, that, believe it or not, is in the USDA eligible area. Mm-hmm. What about the area that you live near?
So I'm in I guess you could consider South St. Augustine. So I'm off of US 1, and if you're going south, you're headed towards Palm Coast. So like from my end all the way to Palm Coast is USDA eligible. But once you hit
Not Palm Coast.
yeah, correct. So like I said,
checked.
these little pockets, it's kind of it's interesting.
So I'm going to confess, folks, I made a little bit of a list here, but believe it or not, you got Fernandina Beach, Yulee, Hilliard, Callahan, Bryceville, most of Nassau County, right, is in there. What about over in Clay County? Some of those.
Yeah, Clay County, Middleburg is Green Cove.
Gotcha. How about over in Putnam County?
Oh yeah, I think all of Putnam County is USDA eligible.
Okay, so that would be Palatka and East Palatka, which is a beautiful area, folks. Let me tell you, it's on the river. There's mature oak trees there. It's very nice.
They're up and coming. They're really up and doing a lot of work there. They're bringing a lot of industry. I don't know if you heard, but the Bass Pro guy actually bought up a bunch of land out in yeah, where was it? Out in, dang, my mom delivers mail there.
I gotcha. Bass Pro Shops.
Pomona Park. Yeah, the owner of Bass Pro Shops bought up a bunch of land, like acres and acres, out in Pomona Park, where he's going to be, it's going to be like a hunting camp resort.
Okay,
so
cool.
They're building that up, and lots of homes they're starting to build along the river too. So
okay. So to keep the cost down on a USDA loan, to keep it like 100% covered, that's what we're trying to do, is have it 100% covered, right, through the guarantee. So, not all sellers will pay closing costs. If it's a really primo property, we could try to negotiate closing costs, to be covered by the seller. But sometimes that's not always an option. It is preferred that your realtor would ask for closing costs in the negotiations, though, right, on a USDA loan?
If my client
or
is
the buyer to pay the buyer's closing costs.
Correct.
Seller.
Yeah, I'm with you on that. So yes, I usually, once I get my client pre-approved and we know that we're going to go to the USDA route, depending on what funds are available for them, if having their closing costs isn't in their pocket, then, we've got to come up with a solution. So that's either, asking the agent to negotiate these closing costs from the seller to be credited towards the buyer. So they are basically coming out of pocket for no money on a house. Or I don't know if you knew this, but USDA actually, in some cases, will allow you to roll in your closing costs and finance them. So
okay, yeah, and I meant to ask you that when we were talking about, okay, so it's zero down, but there is a fee, right? Like a guarantee fee. They call it a guarantee fee. It's 1% of the purchase price, right?
Correct.
And you can roll that into the loan, right?
Yes, that is always rolled into the loan for the most part. And then, but yeah, so 100% or USDA loans are what we call 102% LTV. They allow you to do 102%, which is loan to value. So that extra 2% is liable to be your closing costs where you finance those. Again, that's only in some cases. That doesn't work for everybody. Not like every scenario qualifies for that.
If a person was retired and has like non-taxable income like Social Security, I've heard you guys gross that up by like 25% or something like that because it's not taxed?
Yes, correct.
Okay, so that's very cool. So they would have possibly their pension, Social Security, all that stuff that they could factor in as well. So, I mean, so having a job, being employed per se, is not a requirement necessarily. They look at that, the retirement would be okay.
Oh yeah. Any type of, so whenever you're qualifying for a home, and this goes for generally all loans that what we do, right? They want to make sure that your income is just going to continue after 3 years of you closing on the home. So, I've done loans where we were able to use IRA distribution plans, and the guy was just pulling money off of that. And, I think it was 5 years out until it ran out of money, but hey, we were able to use that.
So if a person has money invested that's not liquid, that doesn't necessarily count against them, right? With a USDA loan,
If a person
has some assets like some stock, or some like an IRA or 401k or something like that, it's not liquid like money in the banks per se. That's still something that they could still try for a USDA loan, right?
Oh yeah, USDA loan is, I mean, they're not going to, scrutinize you based off of how much money you have in the bank. If you've got $50,000 in there, and you still qualify for the USDA loan. Are you referring to as far as like, if it's not liquid, but are they getting income off of it monthly? Are you saying?
No, I'm just saying it's just invested.
Okay. Yeah. So we're not even going to worry about that.
Okay. Got ya. To also help with closing costs or down payment assistance if needed. Is there a program in Florida that a person can utilize?
Yeah, we do have a couple of options for down payment assistance / closing cost assistance programs. One that I've been really familiar with lately and that's been really popping is the Hometown Heroes program, which is produced by Florida Housing. And essentially that can grant, or not grant, it isn't a grant by any means. It's considered a second mortgage. But it allows you to borrow up to 5% of the loan amount that for the home that you're purchasing, and with a cap of $35,000, and you can use that money to cover your down payment, and whatever is remaining will roll over to your closing costs. So think about it. If you've got a USDA loan with 0% down, well, that money is going to roll over and just cover all of your closing costs.
And I mean, of course, heroes, the heroes that we're talking about when this started out were like law enforcement, firefighters, teachers, ministers, nurses, that kind of thing, right? And since then, the program's been opened up more to people that work for a Florida-based business, right?
Correct. Yeah, they did make that modification, which, that's great news for a lot of, home buyers that are here in Florida. You're right. So the trick to that is they just have to have a brick and mortar, or their business that they work for has to be established in Florida.
So that second mortgage sounds kind of scary. Does that mean that a person would have that on top of their mortgage payment? For instance, with the USDA loan, can this be combined with a USDA loan?
It certainly can. Yep.
Okay.
The Hometown Heroes program is good for USDA, FHA, VA, and conventional.
Wow.
Yeah. So you actually don't need to pay the money back until you eventually pay off the home, refinance, or decided to no longer live there as your primary residence. Then that money is going to come due. But I look at it almost as like a free loan because there's zero interest on that money. So if you borrow $13,000 for your down payment and closing cost, you don't have to really worry about it. You're not going to get tapped on it monthly on your mortgage. And it's 0% interest. So you're going to be paying that $13,000 back down the road, whenever you sell or refinance.
So Kat, I understand, first-time home buyers are people that haven't owned a house or real estate in the last 3 years, right?
Correct. Yep.
Okay. So to use Hometown Heroes, do you have to be a first-time home buyer?
Not if you're a veteran.
Okay. Yeah. Veterans are excluded from that requirement, right? Okay,
Correct.
But everybody else would be, right?
Yes, they would be required to not have homeownership interest in the past 3 years. So you can't be on a deed, title, or a mortgage.
Okay, so you're telling me a veteran using a VA loan could use Hometown Heroes to help with their closing costs?
Yep. Or a veteran
Wow.
using a USDA loan,
Okay, very cool.
Mm-hmm.
I love that. Could they use that for possibly like a rate buy down or something like that too? The Hometown Heroes?
No. So the way it's going to work with Hometown Heroes is Florida Housing sets the interest rate for the first mortgage. So
Okay, got ya. Okay, very good. So just to remind everybody, what kind of loans do you offer, and can you do refinances and all that kind of thing?
Oh yeah, so we do your typical USDA, VA, FHA, conventional. I also do DSCR loans. We do renovation loans. We do refinances. We do construction and perm loans. Yeah, that's pretty much what I'm sticking to right now.
Okay, so you're a one-stop shop, it sounds like to me.
Oh yeah. Well, as a broker, so we're much different than a bank or direct lender. I actually work with 30 to 40 other different lenders, and we're able to offer their products and their interest rates. So this allows me to do the shopping for my clients and figure out what solution, what product, what lender is going to have the product that's going to make sense for my clients.
Awesome, awesome. So I'm going to wrap it up right there. Thank you so much, Kat, for your time and answering all these questions and helping us get a better understanding of USDA loans and basically loans in general and the Hometown Heroes program. Really appreciate you, Kat. And,
Yeah,
and your information will be in the description. So anybody that wants to reach out to Kat Barker, please do. All right. So I hope you got a lot out of that interview that we did with Kat Barker with First Coast Mortgage Lending. I want to thank her again for her time and all of her knowledge that she shared with us today. If you want to reach out to her, there'll be a link in the description where you can click the link and get right to her directly on her webpage. If you want to reach out to me, of course, my contact information is in the description as well as the comments below. My name's Jay Wike. I'm a local real estate agent. And if you haven't already subscribed, please consider clicking that subscribe button and joining the Living in Jacksonville, Florida tribe. And until next time, hope to see you around Jacks.